name is Ain Akila binti Amizan, student ID 2020-898334.
Assalamualaikum everyone. My name is Nurul Ilyana binti Abdul Aziz. My matric number is 2020483014.
Hi and Assalamualaikum. My name is Nur Adiba Ilyana binti Bahanuddin and my student ID is 2020-853236.
Hi and Assalamualaikum. My name is Aisyah Humaira binti Zuhairi. My student ID is 2020-853722.
Capital A Berhad is a multinational airline group headquartered in Kuala Lumpur, Malaysia. Originally founded in 1993, the group now operates a network of low-cost carriers including AirAsia, AirAsia India, Philippines AirAsia, Indonesia, AirAsia and Thai AirAsia, while AirAsia based at Kuala Lumpur International Airport is the core airline in the company. Capital A Berhad retains significant oversight and equity holdings in the franchise it operates throughout Asia. Capital A represents transformation from an airline to a digital travel and lifestyle brand consisting of 4 business verticals: aviation, digital, ventures and engineering. The vision of Capital A is to be the largest low-cost airline in Asia and serving the 3 billion people who are currently underserved with poor connectivity and high fares. The missions of Capital A are to be the best company to work for, whereby employees are treated as part of a big family, to attain the lowest cost so that everyone can fly with AirAsia, to create a globally recognized Asian brand, and lastly, to maintain the highest quality product, embracing technology to reduce costs and enhance service levels.
Next, I will be presenting on factors to consider having a segment of reporting. It consists of the type of class customer, existence of manager in charge of activities, and nature of business activity. Looking at my first point, the type of class customer. The entity must consider the target group or customer that is suitable and it will be great for returning customer after a one-time event, like targeting customer that want to use airline services on vacation and celebration. Next, we move to the second point, the existence of manager in charge of activities. The operating segment has a segment manager, which is the senior management of the company who is directly responsible for ensuring performance and is always in touch with the chief operating decision maker on a regular basis. Lastly, my third point of the factor to consider having a segment of reporting is the nature of business activity. Any action carried out by a company with the primary goal of profit maximization, and an entity may produce report detailing its commercial activity in a variety of formats like aviation, teleport application, and many more. After looking at the factor to consider of having a segment of reporting, we take a look at the type of segment of Capital A Berhad. Capital A Berhad, or formerly AirAsia, is the biggest and youngest fleet among low-cost carriers in the region with average age of 8 to 9 years. Asia Digital Engineering that provided by Capital A Berhad is driving the lowest engineering costs in the market, ultimately translating to lower fares for consumer and also creating high technology jobs for Malaysians as the key hub in Asia for aircraft maintenance, repair and overhaul services. The third one is Super App. Super App is an application that is owned by Capital A Berhad to make it easy and efficient for customers to make transactions online that provide services like AirAsia Travel, AirAsia Ride and AirAsia Food. Plus, one more way Capital A expand their business is by teleport services. Teleport services is moving things across city in Southeast Asia within 24 hours and make delivery to everyone, from single machines to the largest company, and also provided jobs opportunity to more than 13,000 teleporters. Lastly, Big Pay by Capital A Berhad provide accessible and inclusive financial help management and easier remittance for over 1 million card and transacting users. Now, I will introduce the lineup of 6 Chief Operating Decision Maker of Capital A Berhad. First, Datuk Kamaluddin bin Moranun as Non-Independent Executive Chairman. Second, Tan Sri Tony Fernandez as Non-Independent Executive Director. Third, Dr. Abdul Aziz bin Abu Bakar as Non-Independent Non-Executive Director. Fourth, Dr. Famli E as Senior Independent Non-Executive Director. Fifth, Dr. Muhammad Khadar bin Merican as Independent Non-Executive Director. Lastly, the only one woman in this lineup is Puan Surina Shukri as Independent Non-Executive Director. Let's move to the responsibilities Chief of Decision Making. Firstly, managing a company's overall operation include delegating and directing agendas, driving profitability, managing company organizational structure, strategy and communicating. Other than that, they have to lead the senior management team which assists him in managing strategy business development, high impact and high value investment and cross-business matter of the group. Plus, they also have to guide the management and business operation of the company and the group. Their responsibilities also include reviewing the internal management reports on a monthly basis and conducting performance dialogue with the business senior management team on a regular basis. Lastly, they also have to provide direction for the implementation of the strategies and business plan as approved by the board.
Next, I will explain to you the process to identify the reportable and non-reportable segment. As we all know, there is two segments which is reportable and non-reportable. Operating segment will only classify as reportable segment if they meet the quantitative threshold test. If not, the segment will be classified as non-reportable segment and will be combined and disclosed under all other segment categories. There is three ways in order to calculate 10% threshold test, but in capital A per head, we choose to calculate in revenue basis, which means the reported revenue should be at least 10% or more of the combined revenue for all operating segments. Next, we also need to calculate 75% threshold test, which means at least 75% of the total revenue for the entity should be reported. If not, additional segments should be reported until the threshold meet the requirement. Next, let's move to the calculation part. The table here is the original revenue segment on 2021 for capital A per head. Here we can see the amount of total revenue for every segment. This information will help us to calculate 10% and 75% threshold test. As we all know, the main business activities for capital A per head is aviation, which is Asia. Here we can see the majority of total revenue for capital A per head is from aviation. In aviation, it includes the sales of passenger seat and other aviation segment. Both of them meet the quantitative threshold test requirement, which is more than 10%. Therefore, this segment should be classified as reportable segment. Next, Super App and Asia Digital Engineering. After doing 10% test, Super App and Asia Digital Engineering also should be classified as reportable segment. This is because the total revenue for this segment is 10.42%, which is meet the requirement. Same as the report segment, which is amounted 22.85%. While Big Pay and other revenue segments should be classified as non-reportable segment. It will be combined and disclosed under all other categories because it doesn't meet the 10% threshold test requirement. After we calculate 10% threshold test, we also need to calculate 75% threshold test. In capital A per head, the amount of total revenue attributable to the reported segment is 98.45%. Therefore, no additional reported segment should be identified. Now, let's take a look at the new segmental report of the capital A per head. Here we can see all the reported operating segments are separately disclosed while non-reportable segments are combined under all other categories. After doing a calculation, it turns out that capital A per head got lost on 2021 and the amount of total liability is more than their asset.
Now, I will present about the advantages of segmental report. First, segmental report help potential investor in better investment decision. Second, the profit making and the loss making units can be easily identified with the help of segmental reporting. Next, it is also help in the optimum utilization of resources and better presentation. Last, the segmental reporting can give a better understanding of the financial statement. Next, we will move on to the disadvantages of segmental report. One of the disadvantages is there are many disclosures required in the case of segmental reporting. Hence, it is a time-consuming process. Second, the method of reporting inter-segment transaction for each organization are different. Third, the base of segment is also different as some of the organization divide their segment based on the geographical location and some of them based on the product wise. Fourth, the common cost sometimes can be difficult to allocate. The last but not least, the data presented can be misinterpreted by the investor or creditors. Now, we will move on to part B.
For the basis of preparation of the interim report, which is discriminated, each interim period should be considered as a separate accounting period from the annual cycle. Cycle 1 is meant to predict and describe the financial position and financial performance. And lastly, revenue and expenses items be measured and recognized in the same way the annual financial statements are prepared as per the discriminated. One of the accounting policies used in preparing the interim report is inventories. Inventories, which comprise consumables used internally for repairs and maintenance, are stated at the lower of cost and net realizable value. Cost is determined on the weighted average basis and comprises the purchase price and incidentals incurred in bringing the inventories to their present location and condition. Net realizable value represents the estimated selling price in the ordinary course of business, less all applicable variable selling expenses. In arriving at net realizable value, due allowances is made for all damaged, obsolete, and slow-moving items. The second accounting policy is financial liabilities, classification, and measurement. The group classifies its financial liabilities in the following category, which is other financial liabilities. Management determines the classification of financial liabilities at initial recognition. The group does not hold any financial liabilities carried at fair value through profit or loss. Other financial liabilities are non-derivative financial liabilities. Other financial liabilities are initially recognized at fair value plus transaction costs that are directly attributable to the acquisition of the financial liability and subsequently carried at amortized cost using the effective interest method. Changes in the current value of these liabilities are recognized in the income statement. The group's other financial liabilities comprise payables, borrowings, and lease liabilities in the statement of financial position. Financial liabilities are classified as current liabilities except for maturities greater than 12 months after the reporting date, in which case they are classified as non-current liabilities. Financial liabilities are recognized when the liability is either discharged, cancelled, expired, or has been restructured with substantially different terms. The next one is types of interim reports prepared by the company. Financial statements prepared by Air Asia Berhad is unaudited condensed consolidated income statement, unaudited condensed consolidated statement of comprehensive income, unaudited condensed consolidated statement of financial position, unaudited condensed consolidated statement of changes in equity, and lastly, unaudited condensed consolidated cash flow statement. Contents that should be presented in the interim report. All of each headings and subtotal that was included in its most recent annual financial statement. The selected explanatory notes required by the MFRS 134 interim financial reporting, which focus on the significant changes in the financial position since the last reporting date. The basic and diluted earnings per share on the face of the statement if the entirety presents the item of profit or loss in separate statement. The report must be prepared on the consolidated basis if the most recent annual financial statement was a consolidated statement.
Next is the period for the current and comparative for each statement prepared by the company. First, statement of financial position. For interim financial report, it starts on 1 January 2021 until 31 March 2021. For the comparative financial report, it starts on 1 January 2020 until 31 December 2020. Second, statement of profit or loss and comprehensive income. For interim, it starts on 1 January 2021 until 31 March 2021. And for comparative, it starts on 1 January 2020 until 31 March 2020. Next, statement of changes in equity. It starts on 1 January 2021 until 31 March 2021 for interim, and comparative, it starts on 1 January 2020 until 31 March 2020. Last, statement of cash flow. It starts on 1 January 2021 until 31 March 2021 for interim, and for comparative, it starts on 1 January 2020 until 31 March 2020.
On 21 June 2021, the group completed acquisition of the equity in Big Life for a purchase of asset consideration of 103,080,000 ringgit to be certified wholly via issuance of 85,000.9 million new ordinary shares of the company at an issue price of 1 ringgit 20 cents per share. For the journal entries, Capital A Berhad will be debited property, plant and equipment as a purchase and asset by issuing shares amounted to 103,080,000 ringgit and credited to ordinary shares amounted to 103,080,000 ringgit too. For the Capital A Berhad fourth quarter statement of financial position as at 31 December 2021, the amount 103,080,000 ringgit will be added at non-current asset. So, the figure of property, plant and equipment will change from 1,085,639,000 to 1,188,719,000. As for capital and reserve, it also will be added under share capital, which is amount before adjustment was 8,023,268,000 will be changed after adjustment to 8,126,348,000.
On 23rd December 2021, Capital A Berhad provided service to Bulan Bintang Berhad that worth 40 million ringgit and will pay for it next month. To record this accrued revenue, the resulting adjusting entry is made. Capital A Berhad debited account receivable 40 million ringgit and credited service revenue 40 million ringgit. For Capital A fourth quarter statement of financial position as at 31 December 2021, it will be added under current asset 40 million ringgit under account receivable. So, amount of account receivable will be changed from 608,405,000 to 648,405,000. It also will be added on capital and reserve 40 million ringgit under reserve. So, amount of reserve will be changed from 161,321,000 to 201 million.